Private money. So private money are folks that you likely don't have a pre-existing relationship with, but they're individuals and they're lending out their own money to people that are doing real estate deals. So again, some of the benefits and the pros of private money lending is, again, you're going to have somewhat minimal red tape. Likely going to be less requirements around doing background checks and credit checks and appraisals. Which will help you execute the transaction presumably a little bit quicker. So these folks are not necessarily your friends and family where you have those pre-existing relationships, but they are generally local business people and members of the community that do value building those relationships with you over time, which can benefit how these deals get structured. Private money can also be more scalable than friends and family for a couple of reasons. One, some of these folks do have those deeper pockets, but also because you can build a larger network. If you're just doing friends and family money, the amount of capital you can raise is limited by the number of friends and family you have that are capable of investing along with you. When you start to expand that network out to other folks in the local community, pockets can be deeper, but you also have more people to raise that capital from. The other nice thing about private money is because most of these folks are local and they are going to likely want to get to know you and they likely have a perspective on the local market that you're operating in, they can also offset all of that with any lack of experience that you might have. So private money also tends to be a good place for people to get started from a raising capital perspective because that local relationship, that local market knowledge allows the investor to maybe lean in a little bit more if you don't have the experience that other types of investors may require. Some of the cons of private money are, again, there's going to be some limitations around ability to scale. So again, this is going to be a function of how many of these folks do you know, how many of them are in your network, how much capital do they have, but there's likely going to be some limitation at some point, depending on how large your capital needs are based on how your business is growing, to how far private money can take you. The other thing you have to look out for private money is I would say this is less prevalent today than it was 5, 6, 7, 8 years ago. But some of these folks are lending money to real estate operators or doing deals with real estate operators because they actually want to own the property. So part of their strategy is they'll make loans to folks. Some of those loans will go well, they'll get paid back. Some of those loans won't go as well, and they're happy to take over the property. So again, this doesn't become a problem for you to the extent that you're performing, but if this is part of what this private lender strategy is, they may be less inclined to work with you when challenges do come up because part of what they're trying to accomplish is actually taking the property. Somewhat of a rare exception, but it is out there and something you should be aware of, particularly if the private money lender also happens to be in the business of real estate investing. Again, this is going to be dependent upon the investor, but sometimes they can also like to be hands-on, right? So they may have opinions, again, on paint colors, the kitchen design, to how much you list the house for. So this is more of just an expectation setting and understanding what the person's role is going to be. But some of them do have some preference in being involved, and if that's the case, you should be okay with that. Another con is there could be some limitations on how they service the loans and their flexibility on that servicing. Again, depending on how you set it up, are you making payments? Do you have to write them a check every month? How are construction draws being managed? Are they going to come out and check the work and give you additional capital as works progress? Is all that money going to come up front? So just having a good understanding of how the relationship is going to work after the first amount of capital comes in, as you're making renovations or any other types of improvement to the property, how's that servicing relationship really going to work? And then the last thing, and perhaps one of the biggest constraints around private money, is this can be massively time intensive. Right. So if your business is growing and you need a lot of capital to grow your business, a lot of your time can be spent on building those relationships with the private money lenders, finding new private money lenders, pitching them on the deals as they come in, investor reporting, dealing with any questions that they may have about how projects are performing. So again, it's a really good place, particularly for people that are getting started. And even beyond that, as long as you can dedicate a certain amount of time to, again, managing those relationships and growing that network to support the capital needs of your business as it grows.